Many of you are not even realizing that this range in this zone each and every single morning is costing you from making money. Okay. So what we're looking at a 15-minute time frame. We're looking at the NQ, which is the NASDAQ futures. And what we're looking at in the range that I'm talking about is the ETH highs and lows. Okay. Some of you may be familiar with it with the Asian and London session highs, overnight session highs, the pre-market highs and lows, but you got to start marking out these levels. Okay. So each and every single morning, I'm going to start by marking out these levels, and they're very, very significant. And the reason being is because what it's going to do is it's going to actually give you a nice range where you can play breakouts and you can play break and retest and you can play range bound scalping and you can play breakdowns and then you can play reversals back into the range. Notice how I just fired off 3, 4, 5 different trade ideas that will happen each and every single day based on what the price action does. And a lot of times it does not matter if the market's going up, down, or sideways, because you're going to have this zone marked out each and every single day. And based on what the price action does, you're actually going to be able to play it and find these trades. So I'll give you an example today. Depending on when you're watching this video, you guys can go back and kind of back test this. But the price action that I'm reviewing right now is from December the 9th. Okay. So what I've got marked out is the overnight session highs, 21,706 and a quarter. And I've got the overnight session lows, and that's marked out at around 21,589 and a half. And why is this significant? Because what we're looking for is, again, breakdowns, breakouts, break and retest, reversals, or range bound scalping. Okay, that's what we're looking for. In today's price action, you're going to see that opening 15-minute candle, which could also be classified as the 15-minute opening range for those of you guys who are playing the 15-minute opening range, you're going to see that we actually break the overnight session lows. Now that light bulb needs to start flickering. We've got to start using more common sense when it comes to our trading. We've got to stop getting so emotional and so anxious to start clicking and firing off the buy and sell button before we even know what the hell is going on. Many of you guys are struggling traders. Many of you guys who are watching this video would not be watching this video if you were making money. Okay. Now, I'm not sitting here saying that each and every single one of you guys that is watching this video has never taken a payout, but I'm almost willing to guarantee that you're not consistently taking payouts, meaning on a month-by-month basis. Okay? That's okay. We're going to learn and we're going to fix that. We're going to fix that. So by marking out these ranges, it's going to give you 2, 3, 4 different trade ideas that you can play. Now, in this particular case, once we broke the range, great. We started to bounce. We bounced up into the middle of the range. I got this green dotted line here. We bounced into the middle of the range. Now, once we bounce up to the middle of the range, we failed to make a continuation move higher and take out the overnight session highs, and we started to roll over. And we started to roll over again. Well, our entry needs to be once we confirm the new low that broke down through this pivot. If the pivot is the overnight session lows and we broke that, sellers have already breached, they've already breached support, right? We don't need to make this complicated than it is. They breached the support. What's the support, D? I'm not following. What's the support? The support was the prior swing low from the overnight session. Why was it support? Because pre-market overnight session is clearly showing you that that's where buyers once before were comfortable, okay, stepping into the market and buying the market higher. Now, once we broke through those buyers, essentially that support zone, all we're waiting for now is a following action to confirm. And once we confirm, we want to be locked and loaded and we want to take a piece of that ride. Now, depending on whether you want to hold it for 100 points, 50 points, 20 points, it's going to be determined on how much you're willing to risk and how long you're willing to hold this trade. Because we never know how many points this is going to go down. For me to sit and tell you that I knew that this market was going to drop 100 to 200 points after breaking this would be a shot in the dark. Anyone would be lying to you, okay? But guess what? If I try to target maybe 10 points, maybe 15 points with an ATR on the 15-minute time frame at this specific time, trading at around 25 to 30 points, I think that's a pretty good target, okay? So use a 5-minute ATR, use a 15-minute ATR. We can start using average true range to build out a potential take profit, to build out potential stop losses. If the ATR is, let's say, 30 points on a 15-minute time frame, then maybe I want to give myself 20 to 30 points worth of risk for potentially a 1-to-1 of 20 to 30 points, right? And I want to get in on a breakdown of a key level. I want to get in on a reversal. Now, what's this reversal we talk about? Well, let's say that we did sweep and we broke that pivot and then we punched down. We made a little bit of money to the downside. And let's just say there was a sweep of these lows and then we started to climb back into this range. If we were to climb and close back into this range, we could use a previous 15-minute or a previous 5-minute candle as a stop. We can get in on a following candle once we confirm that we're back inside this range, and we can play this back up to the upside, guys. Okay, so there's a lot of different things that we can do. The same rules apply to that if it was a breakout to the long side. Now, let's just say we came down here and we tested this area and we broke it, and then we kind of bounced and we chopped, and we're just range bound trading. We're not breaking to the downside. Well, maybe every time we get within this 10 to 15 point zone down here, we start buying for the potential sell for profits in the middle of the zone. And when we get to the middle of the zone, we can use the previous high, or we can use some type of consolidation high as a stop loss to kind of ride this for a little scalp back down to the bottom of the range. Okay, so there's a lot of things that you can do off this zone, and you don't need to use the 15-minute chart. You can use the 1 minute, you can use the 5-minute, you can use whatever minute you would like to use in terms of time frame. But you need to stop missing out on opportunities by not having these levels set, by not knowing how to play these levels. If you guys are interested in trading price action with me, jumping on a call each and every single morning with myself and the rest of the crew, meaning with the other few dozen traders who are trading with me each and every single day, then join down below in the description box. If not, I will keep posting these free educational content videos for you guys to continue to learn and grow yourself as a trader on YouTube. But just make sure to give me a like and a subscribe on your way out. I appreciate your time. I'll see all of you guys on the next video.